You are listening to the Tracy L. Clark Show with me, Tracy L., the founder of the Body Regeneration Method. And I am here to empower you and teach you how to connect to the God consciousness like you've never connected before. Tune in every Tuesday, 8 a.m. Pacific, right here on Transformation Talk Radio, where I combine science, spirituality, and ministry to help you unlock the secrets within so you can finally let go of what's holding you back. If you are truly ready to break free and bring in the new and stop wasting your time, join me, and together, let's unlock your superpowers so you can live your extraordinary life. Welcome. How's everybody doing in their land of quarantine? I know it's been a little crazy, but fun. We got to look at how we can take this time to learn, educate. You know what I love to do on my show every week is, yes, we usually have you guys a lot of times call in, but we love to bring you people that really can not only give you knowledge, but also increase your awareness. So this week and next week is not a call-in show due to the fact too of how things are moving and our producers. And so it's a little bit more difficult for you to call in. But I really want to spend this full hour really giving you as much information. You're going to love our guests. A lot of you had sent me already so many messages. If you're going to listen to this later now about what's happening and that he was able to come on and out of his busy schedule. And so before we get there, there's two things I want to share with you. Don't forget Soul Sunday is this Sunday online. There is no in person. We do it online around the world anyways. We have a great topic, 90 minutes at 11 a.m. Eastern. You want to know about that. Before I actually sat down for the show today, I was asking, as you know, the energy of money, the awareness of money, where money comes from. And really on the show, we've talked about this a little bit before, is we're not taught much about money. We're not taught about relationship. We're not taught about things like gold and silver. And I'm like, it's really interesting. We're not taught all of this, yet we live in a world which our number one resource is finances to survive, for food, for shelter. So I'm so excited that we've been able to bring Jeremy Wiseman. I think his name suits him very well, from Guildhall Wealth, because he's very wise. He really is. I've gotten to know him over the last couple of years around silver and gold. So Jeremy, I'm so happy that you could join us today.
Thank you for having me. It's great. I'm so glad to be with you today.
Yeah, looking at this whole structure, and you and I have had some amazing conversations, and I know even all of our community people have gotten to know you. They're like, wow, he's this wealth of information. And I have so many things I want to actually ask you and get your perspective, because I know our viewers, our listeners, wherever they are, they want to know. But I was kind of writing stuff down. I'm like, I don't even know if we're going to get this all in an hour. So we're going to do the best we can.
Okay, sounds good.
My first question is, why in our financial world, before we get to why people should look at gold and silver and understand it, why in your perception is it never talked about? Like, it's not educated. It's like, to learn about gold and silver as wealth or wealth preservation, or the more that you're going to explain, you kind of got to go underground. You got to search. Why is it so hard?
That's a big question. I mean, I know Robert Kiyosaki wrote a whole book about it called The Conspiracy of the Rich, right? Which, if you go back before 1971, when they lifted the gold standard, people did understand it. And then as well, there wasn't as much credit cards back then. I don't think people had credit cards in the 60s.
No.
They had layaway.
Oh, so, I remember layaway, actually.
Right?
And I was born early 70s, but there was a little bit of layaway. I think it left in the mid 80s, somewhere in there. Yeah.
And I think as government control over printing presses came into play, I think that there became an indoctrination in the financial world that gold is a relic, right? Of course, it's a relic. And that continued on to the point where it's gotten to the point where people don't understand the value of anything. It's the first question I ask someone if I get into this type of conversation, which is the lack of knowledge. You're right. They don't teach it. I think they want to keep it that way. And I'll tell you, one of the biggest reasons is because if the government says inflation's at 2%, but real world inflation's more like, let's just say 5%, then they just robbed you of 3.
Wow.
Right? So it's much easier to just steal wealth through inflation than it is to teach people the value of money. Now, I think that's one of the biggest problems out there, is the fact that no one understands the value of the dollar. They think, oh, what's the value of the Canadian dollar? Oh, it's 1.4 something against the US. Well, what's that worth? Oh, it's 1.65 against the Canadian. Well, what is the value? And that's where precious metals come into play, because you need a standard unit of measurement so that you and I can trust each other in business, right? And
That's
once there's
brilliant.
trust, then, you know, in speaking of energy, of course, trust is everything. And the big question right now is, when do they lose faith in the currency? When do they lose faith in that dollar? And certainly once money becomes funny the way, okay, it's not 600 billion being printed, it's 2 trillion being printed. No, it's 6 trillion being printed. When do people turn around and say, oh, okay, wait a minute, what does that mean for the value of things? I don't know, maybe it's when toilet paper, instead of being $1, is $10 a roll, that people say, oh, maybe there's a problem with the dollar here. And as well, by the way, I haven't even started my coffee.
That's okay.
but yeah, I'll stop.
No, I want you to keep going, because this is a really good. In 2008, and I love this whole world, and this is why with my community, I've been telling them for 5 years, you need to really understand gold and silver, and they all looked at me like I had 5 heads. Like, Tracy, no one talks about that. And it's so important, because like what you said, in 2008 especially, my kind of bells went off. I'm like, oh, well, you don't have a printing press in your basement, I don't, so it's literally just numbers on a screen that keeps putting in there. And like you said, inflation, I don't know about you, but you know, I go buy a cucumber yesterday and it's like $2.95 when the cucumber is usually 99 cents, right? Or a head of lettuce I saw on the shelf was $4.99, which is usually $1.99. This is what you're talking about. So people can equate it to their food. And our money, you need to have money to survive. It's just the way our world is, whether people like it or not. You need to have the awareness around. And I think that's where gold and silver comes in. So you had a really interesting point that I like, is like, okay, so why would people want to look at gold and silver? I kind of have 2 questions here, and then you can just run with it as long as you want. So I've always said the importance of gold and silver. I've had my own reasons. I would like people to hear your reason why there should be a look at gold and silver in their portfolios. I know right now everybody seems to be running to it as a last resort. So people have fears that they can't get any, but what's your direction to people listening that don't know anything about gold and silver, why they should have, at least consider having some of it to balance out their so-called portfolio, I guess? Like, just
I think getting back to the first question, which is about knowledge, and really the big part of awareness is understanding the inflation, right? Mm-hmm. That government says is 2%, which means they are literally saying you're losing 2% of your purchasing power every year. Forget taxes, right? Forget income tax, forget paying for things with after-tax dollars. You're losing 2% a year. Now, like you said, but when I go to the grocery store, I'm paying this much more for this. And when I go to, when I'm buying, subscription after subscription, right, of newspapers and all of these things, numbers are creeping up, right? Insurance, right?
Oh, don't even go there.
health clubs, private schools, you name it. Everything is rising. So what is that actually rising at? Most people I speak to, they say it's probably north of 5%, right? Easy. But if the real world inflation is 5% and you're on a strict income or a salary, then every 5 years, that's 25%. And every 10 years, you're losing 50% of your purchasing power. So if you made $100,000 10 years ago, you need to be making $150,000 today. Now, why gold? Well, the problem with, if you understand the idea of inflation and the loss of purchasing power, then it really doesn't matter if your stock goes up 5% a year either. Because if your stocks are going up 5% a year, you're breaking even. You're not going anywhere, right? I just spoke to someone about 2008, that after 2008, speaking with a friend of mine who worked at an Edward Jones, it took 5 years to get back their losses.
Wow.
not including inflation. If inflation was 5%, then they're still behind 25%, which took another several years. Okay, and then thankfully the market went up for 11 years, right?
Yeah.
So that they could get a bit ahead. But how far ahead did you really get? Why gold? I don't know, 10% a year on average across all currencies seems like a pretty good hedge to me, number one. And that's not including years where gold is going up double digits. Last year, gold went up in double digits. So far this year, gold's up 16% in Canadian dollars, right? It's not like the price of gold skyrocketed. It's more about the fact that we lost our purchasing power, lost our exchange against the US, right? And therefore, gold went up. So as a hedge, I think it's great because you're getting those gains that you need, over 6% on average. So there's that. The other part about precious metals is no counterparty risk, right? I just heard.
So what does that mean for people that may not understand? I understand what you're just saying, but I know, so there's listeners that'll be like, what does he mean when he says no counterparty risk?
Right. So the idea is, for example, I just heard about a major commodities firm who they're not giving out dividends anymore. They've stopped dividends. So if this recession/depression gets really bad, then your typical bank stocks might say we're shutting off dividends because we need the money, right? All those stocks, all those companies that were buying back stock with debt, right? It doesn't matter if it's cheap debt, they have to pay the debt back, and there's no income. So they're going to say no more dividends. No more dividends. Let's use that money to pay off the loans. Or they say no redemption. When you hear no redemption, you have counterparty risk. When you have
no redemption in their stocks would be allowed, correct? Like they couldn't redeem their stocks. So I hope you guys are listening. I really want you to listen to what Jeremy's saying. So he just said that. It's happened. I know it's happened.
I mean, it happens in hedge funds all the time, right? Hedge funds will say no redemptions. We need the money to cover a call, whatever it is. And now we're getting into the difference between what I call gold investments and gold ownership. Yes. That's really where the lack of counterparty risk goes in. So there's a major bank out of Europe called ABN AMRO. And you see them sponsoring soccer and tennis and all of these things in Europe. And they just shut out 2,000 clients from their gold. So people thought they owned gold. They got a memo from ABN AMRO saying, you have to sell your gold or we're going to sell it for you on April 1st. Take door number 1 or door number 2. Either way, you're being cashed out of this. No gold for you.
So was their gold held then at the company?
Who knows?
Who knows? They just said
was it held and it was being used, it was being rehypothecated for other things. That's an option, meaning when people decided they wanted to redeem it. First of all, you can't redeem gold in most investments if you don't own it. I mean, that's our motto here. If you can't hold it, you don't own it. But if you don't actually own it within a fund, an ETF, if you can't go and hold that bar in your hand, you don't really own it. If you look at I know we're going into too much detail here, but if you look at those fine prints, it's saying, well, you can't take delivery unless you're, a client the size of Kevin O'Leary, right? You're not getting your hands on it if you're a small player. So counterparty means there's a contract on the other side. There's another player there. You're investing in someone else. You buy Apple stock. The counterparty is Apple. Are they going to exist in 10 years, right? You buy a fund that's holding gold. The fund is the counterparty. You have to trust that fund that they're going to come through on that investment. Whereas when you actually own gold and silver physically in your possession, who's coming after you for any of it? No one. There's no counterparty. So I would say, as my final analogy for that, if I put cash under the bed, it's out of the bank, it's under the bed, government can still print it. Yeah. Can still make you lose money, lose value, lose your purchasing power. That's a counterparty, in my estimation. If I put gold under the bed, nothing. They can't do anything with it. I can bury it for 2,000-3,000 years and pull it out of the ground, and it's still exactly as it was. Hasn't corroded, hasn't eroded. dust it off, and it's exactly as it was. I can melt it down and turn it into something else. That is stored energy right there, right?
It is. And it's also for people, the one thing, just on a side note, if you actually, when you touch a physical bar of silver or gold, and I did this in a workshop once, I said, here's some paper, touch it, and here's some silver, touch it. And they were like, whoa, I actually feel like I had money. But going back to your point that you just made for the listeners are clear, basically, if it's in paper, so like any form of stock, to clear for people to understand, there is so many layers behind the paper. That's why there's no physical. That's why they can lose it, like you say, with the counterparty risk, because it's just paper. To me, it's like having numbers on a screen again. It's just paper.
And not only that, but let's say you have a portfolio, a stock portfolio, and it's quote unquote diversified, right? You've got some tech stocks, you've got some insurance stocks, you've got some utilities, whatever it is, right? But they're all valued in the same currency. So they're all positively. Right?
Why they say that's diversified? It's like you're still all in the paper in the stock market. Yeah,
you're still all positively correlated to the currency. Whether you're in U.S. stocks, Canadian stocks, they're all positively correlated. They all have the same underlying currency that they're being valued in. Whereas if you have physical precious metals in your portfolio, it's considered negatively correlated. Gold is the anti-dollar, right? Why do people buy gold? Because they don't trust the dollar. You don't need a gold standard. There's a de facto gold standard, right? If you don't like where the purchasing power of the dollar is going, you buy gold because it's going to maintain its purchasing power. And I mean, in your work and talking about energy, that the cost to pull it out of the ground, the energy to pull it out of the ground is one thing. Then you store it in something that does not erode over time, right? And then it's malleable. You can change it into something else at a very low cost. So the store of energy there is so important. That's a big, I mean, if you follow, what's his name? SRS Rocco report, he talks a lot about energy, mostly about oil and just how the world needs an energy source. And when you run out of energy, you basically borrow money. Right?
Yeah.
You borrow, you know, if you can't pull oil out of the ground at $70 where it was, then you just borrow money to make up the difference. But what happens when you can't borrow anymore? So it's interesting to see energy going around, especially in the gold market. And that's where we come back to investments. Do you really have gold, or do you have a gold investment? An investment has a counterparty.
So to have physical, for people who are new and listening, because I know it takes some awareness and education. So with the actual physical product, can you explain to the listeners why all of a sudden it ran out around the world and what's happening right now? Because I get a lot of people ask me, they're like, you can't get it anywhere. And you hear it, you and I would hear it a lot because we're very interested in this subject. People that are maybe just coming on are like, what do you mean there's no, it's an abundant supply. Can you talk to why it's run out around the world and what people can do maybe in the next couple of months, what you guys see might be happening, especially if they want to say, maybe I should look further into having some of this, given on where the world looks like it's going right now?
Sure. So first, there's the pricing.
Yeah.
So the pricing mechanism for precious metals is done through a futures market. So it's all paper. And that paper market has run on the thinnest veneer of physical product for decades. And in fact, one of the reasons why they created the COMEX futures contracts for gold and silver was to make it volatile, as your dealer would say, right? Your not your dealer, but your advisor is going to say, don't get into gold, it's volatile. Well, it's not volatile if it's moving up 10% a year with only one down year in the last decade and a half. That's not volatility. Day to day, okay, maybe, but you have to look at the bigger picture. But they created that because they don't want people holding precious metals, right? Again, if gold is the anti-dollar, and I'm drifting into conspiracy a little bit.
That's okay, we're good with that.
But if gold is, and when I say gold, I'm talking gold and silver, by the way. Yeah. It's easier just to say gold.
Yeah.
But gold is the anti-dollar, And if you have gold under the bed, as we said, the government can't rob you of anything. So what are they going to do? Right? Yeah. So that gold is the anti-dollar. The governments and central banks do not want you into precious metals because there's nothing that they can do with that. Same thing with the banks. If they sell you an ounce of gold and you take it home, guess what? Your money's not in the bank. They can't borrow that money and do whatever they're doing with the money, right? Whether it's putting it into something and getting a few percentage points. So understanding that the price of gold is created by this futures market. And the futures market doesn't actually have any physical. So you have this fake, they call it synthetic supply of precious metals, which have essentially pushed the price down. So over the last several years, the paper price has not reflected the demand of the metal. Plus, economics 101, if you manipulate a price to a lower level, that means that people like you and me can just buy more of it. Mm-hmm. And so that's what the savvy people are doing. China's buying gold, Russia's buying gold, India's buying gold. Central banks around the globe since 2008 have been buying mass amounts of gold, not silver, that's the people's money, but they've been buying more and more gold. So having a low price means demand on the physical is crazy. Now, even in December, we were having some large orders go through our registered accounts, and the Royal Canadian Mint got back ordered. They couldn't keep up with demand. And we actually had to stop providing 10-ounce bars of silver in our registered accounts. And we had to kind of manage inventory to be able to handle some large orders of 1-ounce bars. So we already knew that the market was tight. If someone was coming through with a few $1,000s, $10,000, $50,000, that order could get filled, right? Mm-hmm. I saw someone saying it was kind of like a strawberry, someone selling strawberries at a market, right? There's lots of little cartons of strawberries, enough if one person here and there wants it. If everyone there decided they wanted to get it, there's not enough. That's how tight the market was. So then, obviously, most people want to buy insurance after the fire.
Yeah, isn't that true?
It starts going down. Everyone wants to get into metals. Luckily, and this is the question I was getting, luckily the price of gold and silver were going down in price based on this paper market. And I was getting phone calls and text messages. Why is the price of gold down? Like, shouldn't it be skyrocketing? And, I just said, just wait. Can you get it? That kind of thing. And of course, the physical market, everyone decided they wanted to get it. The price was cheaper. And it's time. It's time to get that insurance policy. And every dealer sold out of their product. The wholesalers sold out of product, and the paper price is low. Well, then what happens?
Supply and demand.
The dealers, even though they don't really have the product, they're saying, okay, well, the price of silver, let's say, even though the price on the screen is saying $12, $13. If you want a 100-ounce bar of silver, it's $19. That's before a retail premium. Now you're up into the $20 range, $22 range, which shouldn't be a surprise. If silver was trading at 22 versus 18 a month ago, no one would be surprised. Yeah. Gold right now, even though the spot price of gold, unfabricated paper price of gold is $16. Mm-hmm. Fabricated, refined, wholesaler, retailer, physical price is now $17.50. Mm-hmm. Well, if the price of gold if the paper price said $1,700 an ounce, no one would be surprised. But the paper price says $1,600, right? So the price has actually moved up. Yeah. But you still can't even buy the product right now. And so the price discovery mechanism will work itself out over the next several weeks. Product will come back online. Right now, the biggest problem is that, Royal Canadian Mint has shut down production for 2 weeks. Major Swiss refiners have shut down production for 2 weeks. So if you thought, if they ran out, now they have to get production back up, fill those back orders, and then the physical market will flow again. So I suspect within the next month, there'll be product back in the market. Prices will be back into some sort of sense of normalcy. And now we can start talking about where gold and silver are going to go in the future.
Okay, this is really great. So I hope people, that's a lot. I know it's a lot of information for new people to also listen, because you have to understand, like Jeremy's saying, there's a lot of manipulation on the paper side. And that's where you really have to understand your physical side and where the upswing is. So 2 questions I have is, one, when the supply starts to come back through and people say, okay, maybe I should look at this for, my insurance now. And I really got to learn a little bit more to balance out the portfolios, because I never got that. I thought everyone told me I was just dumb. And I'm like, I remember when I was like 26, I kept saying to the broker, because it was kind of through the tech, and, I'd sold a business and then the broker went and invested because I didn't think I knew anything and lost a bunch of money. And I was like, but how is this diversified? Like, there's so many ways of money. Oh, no. Like, you don't know what you're talking about. So where I love about gold and silver is exactly what you're saying. It is insurance. It's a difference between, some people I think get into gold and silver because they're looking at it like their stock, like what you're saying, that it's to make their big money or whatever, rather than their insurance. I would like to know if you can just, the difference, why people shouldn't do that one more time, because I think people miss that. They're still looking at it as what they're going to accumulate versus how they're hedging. But if they're saying, okay, I need to maybe have some of this in my portfolio, we know the supply and demand ran out. What do you think when the supply chain comes back on, and we know physical is really hard to get right now, and we know it's going to still take time. If mines and stuff are shut down for a bit, they got to get it out of the ground, right?
Yeah.
Do you think the prices of the actual physical are going to do I could be totally wrong, but a much bigger jump, as because there is a lot of demand? And what would you say, roughly, just your opinion, not advice, but your opinion of their time frame to really get their insurance in order? Like, if someone says a fire's coming, don't wait till the fire, like you said.
Yeah. So absolutely. I think, first of all, yes, there's a lot of misunderstanding. I get a lot of people who say, I want to buy 1,000 shares of silver. Wow. Right. So but you mentioned it earlier, all of that changes if you hold some of it in your hand.
Yeah.
Right.
It does.
We have people come to the office. We put a 100-ounce bar in their hand. It weighs close to 7 pounds. They go, whoa. Yeah. It's dense. So, oh my God, I can feel that weight.
That's a baby. That's a newborn baby.
Yeah. And it's that aha moment of, wait a minute, I can store my wealth here. It doesn't have to be digitized on some screen somewhere where someone's putting it into this and that, and apparently I'm diversified. So understanding that having a physical asset is a good idea as part of the standard diversification, right? I mean, getting back to what you asked right at the beginning, why do we not understand gold and silver equally? We could be asking the same question. Why do we pray at the altar of stocks?
Yeah.
That wasn't always the only game in town, right? And people who buy real estate and say, I've made more money in real estate than I ever did in stocks, are bang on. Because I have to tell you, from my experience, most people, unless you have a couple $1 million to put into the stocks, you're not getting the type of information and the type of intelligence that it takes to actually make money in those things. Yeah, you can get lucky. You can buy some pot stocks and make a ton of money if you're smart enough to sell, right? But overall, we're just talking about how to easily protect your wealth and grow your wealth. And that's where the precious metals come into play as a portion of the portfolio. We've seen a lot of people come to the market in the last couple of years because they looked at real estate and they said, okay, I've just sold a property over here. I think property prices are crazy. They've moved up rapidly. I'm not comfortable getting back into that market right now. So we've had those type of people. We've had people who've said, I've done well in stocks. It's pretty crazy. We're at an 11-year longest cycle in history. How can that keep going? Maybe they're listening to the show and realizing, wow, all these companies are just buying back stock because if the stock price goes up, they get bonuses. and who's making those decisions, but the board, and they're the ones getting the bonuses if they buy back the stock. It's criminal. It's all criminal. So people wanting to get out of that system, they've been moving into precious metals, and they've been moving in a lot more than just your typical 15%, because if you're in the everything bubble, which has just been burst, you want to have more protection than usual, right? So there's that side of it. I think in terms of pricing, I wouldn't be concerned if I was a new buyer. Again, if you're buying silver at $30 an ounce Canadian as opposed to $23 an ounce Canadian, that's not a big deal in my personal opinion, only because there's 7 billion people on the planet. There's less than 1 billion ounces of silver above ground. That means not everyone's going to be able to get an ounce, right? Most people are buying 500, 1,000, 10,000. You want to talk about first world problems. And if silver got to $48 an ounce when the US debt was at 14 trillion, where's it going to go when the debt in the US is 30 trillion, 32 trillion? The price of gold and silver are going to go up exponentially. It's going to be an incredible ride. And I have to tell you, in 2011, gold went from basically $900 to $1,900 in 10 months. Silver went from $18 to $48 in 10 months. And that's an incredible ride. There's a lot of money being made on that. But when do you think most people purchased?
Probably at the top.
Our busiest month was April, which was the last big month.
Wow.
And the majority of people were buying silver above $40 an ounce.
Wow.
Now, incredibly, and I'm very happy to say that most people over the last several years have had incredible opportunities to buy it lower. And you're seeing a lot more consistent buying of people buying it at these lower prices because they're looking around the world and saying, well, wait a minute, if central banks are all buying gold, right?
Do what the big boys are doing. Yeah.
Do what the big boys are doing. They're printing money and buying gold. What's going on?
Yeah, exactly.
Stock market's prices are crazy. Real estate prices are overvalued. Where else can I find some value? Precious metals. So we've had a lot of savvy buyers, but $30 is going to look like peanuts. I mean, you tell me what you can buy for $30, right? I mean, a magazine and a latte, it's not a lot. So I think ultimately the prices of metals are going to be moon shoots away from where we are today. So to buy it $10 higher, to buy gold $100 higher, in my opinion, not a big deal.
Yeah, and I believe exactly with what you are saying so much, and as I always laugh, I'm like, me again, over time, but I believe in what you're saying too. Dollar cost averaging, right? It's like you get some money, you move it in. You get some money, you move it in. Okay, this is kind of a different question, but the way the market's going, some people might say, do I dollar cost average, or do I just kind of put what I have in there? Or what do people like that do now that we're in it? We're in a very different changing market. Like every day we don't know what we're walking into.
Right. And not only that, but in our market with no product available,
yeah.
It really changes the dynamic of someone's mentality when it comes to purchasing. Right. Usually, typically we would say, put some in your hand, as we just discussed earlier, get a sense of it, right? This is a new market for you, a new experience. You want to establish a relationship, get started, and then you kind of crawl, walk, run.
Yeah.
A lot of people do have a tough time with understanding the difference between this paper price and then the fabricated price, right? We're not buying lumber, we're buying the desk. Right? We're not buying something that is paper and doesn't exist, and therefore there's no cost. We're buying a physical commodity that had to be produced, refined to 99.9% purity, fabricated into a specific bar, hedged, insured, stored, shipped to a wholesaler who are working on thin margins as it is, volume. They're working on volume, and then they have to ship it out to a retailer like ourselves, and so that's how it goes. So I think getting over that hump is a big deal. to a lot of people, and I perfectly understand that. Every single time I bought gold and silver, the price has dropped.
Yeah.
But what matters at the end of the day is how many ounces you actually have.
Yeah.
And that's where you need a little bit of time. So for example, just looking at some of the charts, people's cost to buy gold has been around 6-7%. Mm-hmm. So that means if you're looking at gains of 7% a year, that means your first year is kind of your cost of doing business. Mm-hmm. During a period where we haven't been making double-digit gains, right? The last couple of years, last year we're up double digits in Canadian. This year we're up double digits in Canadian on gold. And so the ability to overcome your cost of doing business is a lot easier over the last couple of years. But even if it took you a year to break even on it, you now have it, right? I bought gold originally around under $600, right? Wow. I was paying $80 over spot back in 2006, which is high, which was high back then. And but the price today is what? It's over $2,000 an ounce in Canadian. Mm-hmm. So, was that a good choice? Do I lament the cost of doing business? Does the $80 matter anymore? No, it doesn't. What matters is that I got it, because it's continuing to grow in value, or rather it's holding its value while the currencies are losing theirs. And that's the key.
Yeah, the fiat it's your purchasing power, as you said. I think people have to understand that's what's going down. I have I can't believe we've got 20 minutes here. I'm trying two quick questions I want to get in here. One is going to be the question I know I told you already that I hear all the time. Okay. One, you'd said like physical, so you maybe have some in your possession and then some stored in a vault. So a lot of questions I know people bring up is like, well, they took the gold in whenever it was. Well, right. I don't remember the year. So what if they steal your gold? And I always know, just personally, I say to people, well, I don't know. I would never keep it in a bank. Like, I like your vault service because I know where it is. I can go feel it, touch it. But can you, for people that don't understand this, when they bring up, oh, they're going to steal my gold, so I don't want to buy any of it, and the difference between having it in a vault versus at home, or why you may recommend a little bit of both, or what your theories and thoughts are behind that?
Tracy, I literally got a call yesterday asking the same thing.
Oh, yay. There we go. So it's everybody, because that's all you hear. The mainstream media is, they're going to steal it from you. Yeah. And they go back to, when was that during the 30s?
1933.
Okay, there we go. Okay.
So we get this question, obviously, daily. People are like, are they going to confiscate my gold? Okay. Let's just reel it back for a second here. It's a logical thing. It's a logical question. It's just not a rational question, I have to say. So first of all, they didn't confiscate gold. They didn't knock on everybody's door and say, give me your gold or I shoot you. They said, we need it. We're on a gold standard. And we're going to give you cash for it. So they didn't confiscate wealth, right? Now, what they did do in the States is gold was valued at $25 an ounce. They gave you $25 an ounce cash for it. And then they revalued gold up to $35 an ounce, which was definitely underhanded. And in that sense, you could say, yes, they confiscated your wealth.
That's thieving. That's a thief.
Yeah, that part of it was the part that was confiscation. But in terms of, is the government going to come door to door and basically confiscate your gold? You have visions of Nazis stealing your artwork. Well, okay, let's really answer this question, okay?
Please.
First of all, this whole program we've been talking about the government confiscating your wealth through inflation. So number one, they don't really need your gold. Most people don't own it. Less than 2% of the population owns it, but everyone's got money in the bank. And the government is confiscating your wealth through inflation every day, and you're not worried about that. I don't hear anyone complaining about that. Now, the government's confiscating your wealth through taxes to the point where you have to beg the government to give you your money back that you lent them at no interest. Right?
Good point. I am with you on that one. I'm always like, we need to look at what is proper. Exactly.
Like, why can't I wait until you tell me that I owe you money, and that way I can at least make some interest on it, even if it's only 1% these days. Yeah. So the government is confiscating wealth through inflation and through taxation. And now, as a gold owner, you're worried about fascism, right? You're worried about,
I love it.
You're worried about literally a Nazi coming by your house and putting a gun to your head and saying, "Give me your gold." That's pure confiscation. So again, let's just keep this in perspective. There was no real confiscation of gold. They gave cash. Less than 2% of the population owns gold, which means the government of Canada, for instance, would have a much, much easier time nationalizing a mine than they would going door to door, going through your safety deposit box. It would be much easier to just nationalize a mine and just mine the crap out of it and get their gold that way. A Canadian mine, right? Now, if it's still, after what I've just said, is still a concern, then buy silver, because there is no precedent of buying silver. If that is still a concern, then you can see behind me that we deal in natural fancy color diamonds. Then buy a diamond. You can store that, you can sew it into some clothing. You can easily hide a diamond, and no one's going to find it, right?
That's on my wish list, by the way. Anybody listening, that behind Jeremy, that's on my wish list.
if that's the concern. Otherwise, we also have a depository in the Cayman Islands. So if it's a big, big concern and you're saying, I really do think, even though I'm ahead of the curve buying precious metals today and getting out of the markets and getting out of the financial system, but I still think they're going to come after my gold, then we can store it in the Cayman Islands for you. Otherwise, you mentioned our depository. The depository that we do have is an independent depository in Toronto. It's in Mississauga. It's IROC approved. That's the Investment Industry Regulatory Organization of Canada. So it means it meets the security requirements. It meets its financial obligations and auditing requirements. But again, it's independent and it's outside the financial system. So if there was declared a bank holiday, our vault is still open for business. You can still go and personally audit your holdings at the vault. And there's never an obligation. You can always take the product home whenever you want. Now, the last couple of weeks, right, we have social distancing. So everyone has to kind of bear with the system and bear with businesses who say, sorry, you can't come today. But that's a different type of story. Otherwise, even in registered accounts, if someone owns physical product in registered accounts, an RSP, pay your withholding tax, product's released to you. It's your product. There's no additional premiums, additional cost. Oh, we have to source the product from somewhere around the globe. It's yours, right? TFSA, well, there's no withholding tax. You can take delivery of it whenever you want. It's no longer in the TFSA. It's no longer registered, but it's your product. So having an independent vault is so key here.
It is. And so just for our listeners we have many listeners outside of Canada, our TFSA, just so they know, it's like it's a registered plan of the government, but they don't tax you on it. So I'm not sure what they have in different. So the IRA. So what would you suggest quickly here? Because I can, one of the things that came just as you said that was for the people that we have a lot of people in Europe, a lot of people in the USA. What would you suggest they look for in a dealer? Because I don't think you're able to help them, are you, from here?
Yeah, I mean, look, there's a lot of great dealers in the States, and they've also all run out of product. Yeah. I would say for anyone who's purchasing product for the first time, that the main thing is that you buy LBMA approved product.
LBMA.
That's the London Bullion Market Association. What that means is you can look up LBMA and go to their good delivery bar list. So what it means is that LBMA has a certain standard that refiners around the globe have to meet for their products. And if you're on that good delivery bar list, like Royal Canadian Mint's been on the list since I think the 20s. Some Swiss refiners, the new ones have been on since the 70s. Some have been on since like the early 1900s. That means that your product is globally recognized. take your product to Dubai, take it to, take it to Russia, take it to Asia, take it anywhere where you want. They're going to say, yep, I know what a Perth Mint bar is. I know what Pamp Swiss is. I know what Asahi is. But if you buy something that's not LBMA, now one of the most liquid markets in the world is no longer liquid. I had a client bring to me, there's a company called Carrot Bars. Okay. And long story short, anyway, we had to go onto their website. They said they produced their bars with LBMA approved product. Okay. Well, once I melt down a Royal Canadian Mint bar, it's not LBMA approved anymore. So he brought all these little carrot bars, and I said, I can't do anything with these. I can't buy them from you. Right? So
that would be similar to when I had finally when I found you guys, and I had brought in the silver I had, right? And you guys were testing it all just to make sure, because that's another issue, right? People can get it from a non-approved dealer, and that's where I learned that. I'm like, people really do this. They can code it, right?
Right.
You guys had your special little machine just to, even though they were all like Canadian Mint and stuff, but sure, right? So
yeah, testing is really easy now. You don't have to go out and get it assayed and pay a lot of money the way you used to. It's really easy to test product these days. But if you're buying LBMA, you're assuring yourself the liquidity. For example, TD, they sell Royal Canadian Mint product. They also sell their own product. Their own branded product is made by a company called Sunshine Mint, which is a good popular mint in the States. It's just not LBMA approved. So is Guildhall going to buy back a TD 1 ounce gold bar? Nope. No. So you're left with a cottage industry, right? You're left to go to eBay to try to sell, are you going to sell your gold on Kijiji, right? Are you going to buy gold on Kijiji or
no.
eBay? So, no. You want to make sure that it's LBMA approved and you're working with a dealer that you trust and that you know well. And definitely in the States, JM Bullion, SD Bullion, there's a lot of big companies out there that do it.
I know as we get to the top of the hour, and Jeremy, I know I'm going to have to beg you to come back because there's going to be a lot of questions after this. But for our Canadian listeners, especially, or people, I guess, not in Canada, they're a little confused. Maybe they're able to reach out to you. I don't know. How can they find you? How can they reach out to you? Because I have said this for 5 years, and everybody literally looked at me like I was nuts. Even my family, they're like, I don't know why you're into this gold and silver. It makes no sense. You're crazy. And then I got a call the other day going, I found some silver from, and I'm like, okay, like I always say better early to the party than late, even though I was very early to the party, but in anything, I think you want to be early to the party. So how can people that say, I need to learn more, and also you have your great podcasts, because I listen to them all the time. You have them on YouTube. Can you let everybody know, how do they get a hold of you? What should their next steps be? Where can they listen to more of you?
Sure. So the website, guildhallwealth.com, YouTube, Guildhall Wealth. You'll see that we post our radio show every week. We try to get it up there onto YouTube. The radio show's on Global News Radio 640 Toronto on Saturdays at 1 p.m., Sundays at 10 a.m. So once everyone's back in their cars and driving around, you can check it out if you're...
I listen to it on my computer.
Yeah, or you can get it on the computer. So guildhallwealth.com, and just reach out to us. Definitely subscribe to the newsletter. We don't inundate people. We barely get it out once a week.
Your newsletter is fabulous, though. It's always full of information. I love it. I read through everything that you send.
Oh, that's good. Yeah, we just try to curate, top 3-4 articles from the week. Maybe post our video, maybe post a different video that's out there. And so we don't want to inundate people, but just give them a different perspective, because certainly if you're just following financial mainstream media, guess what you're doing today? You're buying stocks, right? Mm-hmm. They're going to be saying buying stocks all the way till there's nothing to buy.
I know I look at the energy of everything. It's what I do. People know they listen, and whether health, wealth, whatever. And we increase that awareness for people. And so I love to have people like you on the show. And just on an energetic, intuitive, the stock market scares the whatever out of me right now, because it looks energetically, it's like a roller coaster, and then it kind of roller coasters down and I can't see it coming up. So I don't know. That's just an energy. I'm not saying to people, don't take that as advice, but that's why I really believe that people have to get ready now. Like, it's like I say with people's connection and understanding and not being in fear. It's not an option to not get ready.
Right.
With your portfolio. I don't think it's an option.
You said it. We've always said it. It's better to be a month early than a day late. I think that has never rung more true than the last month in terms of being able to actually get your product. I think definitely people are thinking about prepping a lot more these days. Yeah. The stock market at this point is being completely, they've dropped the shroud, right? The curtain's held back. The wizard is holding up the stock market. I mean, we just need some sort of illustration of Jerome Powell literally holding up the stock market, because that's what's happened. And it's the Japanification of America. The whole financial world is broken, right? Where it's not about making things anymore. It's about driving up your stock so you can profit and get your bonus, and don't worry about research and development, right? There's so many problems with that whole structure. Unfortunately, is this the big great cleanse that the world needs? That's where the jury's out, because unfortunately, in my experience in this market, which is an alternative market in a way, which is so funny because it's the oldest investment in time, but it's considered alternative. But, corrupt power wants to take over when there's a crisis. And so we'll see where this leads us. Is there going to be a great cleanse? Are we going to come together? Are we going to build new businesses? Are we going to actually change the regulations out there and change the structure of the financial markets? Or is it just going to be, we're all going to go onto some sort of Fed coin, which is no different. I don't care if it's digital or paper, it's the same thing. Where's the real value, right? And it'll be interesting to see. But ultimately, precious metals are the bridge. They're the things that are going to protect your wealth and potentially grow it over the next several years while we work through this recession/depression.
I love what you said there. I literally shocked that Zach said, "Okay, gotta go." I'm like, wow, an hour. I literally probably have about 7 more things I want to ask you, so I will have to twist your arm to bring you back. I can't thank you enough for your wisdom, for sharing. I know our community loves you. They've loved dealing with you. Anybody listening, reach out to Jeremy at Guildhall Wealth, because it is one of the things I love to make sure that everybody, no matter what it is, your health, your wealth, your relationships, our goal of our community is make sure you have enough awareness so all those areas thrive together, because then you're empowered. Then you can make decisions not out of fear, but out of choice and your awareness, which is best for you and your family. So thank you so much, Jeremy. I'm so happy you came by. And everybody thank him. And we will twist your arm again. So thank you, everybody, for watching live. And you're going to all get the replay on your 90 outlets. Don't forget to check out our Soul Sunday this Sunday, 11 a.m. Eastern time. And we're going to spend 90 minutes just really connecting through this quarantine and the virus. And next week, we have Dr. JJ Kelly with us, who is going to talk all about children. And again, really give you some real tips of how you can move through some of this with your kid and make them stronger as well. So have an incredible week, and we will see you next week right here on the Tracy L. Clark Show.
Thank you for listening to the Tracy L. Clark Show with me, Tracy L., where I teach you how to connect to the God consciousness so you can unlock your superpowers and connect at light speed and live your extraordinary life. Tune in every Tuesday at 8 a.m. Pacific on Transformation Talk Radio, where together we will unlock the secrets of your body and your life. As the founder of the Body Regeneration Academy, I, Tracy L., will provide you with the insight and simple tools you can apply right now in your life to move you forward and leave the past in the dust. To join the Body Regeneration TLC Online Academy, make sure you check me out at tracylclark.com.